Good afternoon, everyone, and welcome to Stock Market Today. It's Ali Coram and Ken Shreve here with a breakdown of the action in today's session, where we saw investors digesting the latest inflation data in the form of the monthly CPI report. And it doesn't seem like there was a positive reaction by the end of the day, Ken. Maybe recession fears perking back up.
Yeah, it looks like it. I mean, it was initially a positive response by the stock market to news that inflation did cool in March, and that's what the market wanted. But when you're looking at year-over-year inflation, or price is still up 5.6%, it's still quite high, and that was actually in line with what the market was expecting. But overall, the numbers I think were what the market wanted to see. But then you had the Fed minutes come out at 2 p.m. Eastern time, and Fed officials acknowledging the possibility of a mild recession later this year. So it does seem like the recession concerns are back on the front burner here. It's one of many market headwinds, and it was not a great close. We had sellers come into the market late during the final hour of trading yesterday, and then ever since the Fed minutes came out, the market just started to bleed and ended up being not such a great day for the Nasdaq.
Yeah, we can take a look at an intraday chart here, and you can definitely see where we opened was a lot different than where we ended up closing, and you can see where the Fed minutes came out there impacting the session. We're also going to take a look at a couple of stocks in a little bit. We'll be taking a look at Lululemon, CRM, and AESI, Atlas Energy, a new IPO in the oil patch. But first, let's analyze the major indexes in a little bit more detail. As you mentioned, the NASDAQ reversing lower here, Ken, closing down by about 0.9% today. We also had the S&P 500 down 0.4%. The Dow not hit too hard, down about 0.1% by the end of the day. We also had the Russell 2000 down some 0.7% today. So it still looks like that 12,000 level is still a bit of a battleground here for the NASDAQ. And we potentially could see a test of that 21-day line tomorrow, depending on what shakes out come tomorrow.
Yeah, exactly. So what we see right now is the Nasdaq down 6 out of 7 trading sessions, and one little mild point of concern is that it looks like we got higher volume again today on the Nasdaq. It's still preliminary data, so we don't know for sure, but could end up being another distribution day for the Nasdaq today. That would be 3 since April 5th, I believe. So when you see distribution days start to cluster, you want to pay attention. Higher volume declines are normally, a sign of at least some institutional selling, and it can really stop an uptrend in its tracks. But as we're looking at the NASDAQ right now, still above that 21-day exponential moving average. Possible the NASDAQ could test that 50-day line, but right now, this could be the third distribution day for the Nasdaq, and a lot of growth stocks under selling pressure again today. No real sell signals, but just a lot of selling underneath the surface as well.
So, Ken, does it seem like those big bank earnings might be the next catalyst for the market, maybe providing some relief, or could be a cause for more concern? It wouldn't take much to send us to the highest levels on the year, but also, like you said, we could face a test of that 50-day line.
Well, the bank earnings on Friday are definitely going to be a focal point. Citigroup, J.P. Morgan, Wells Fargo. We have BlackRock. Earlier today, Bloomberg reported that some of these banks that assisted with this $30 billion cash infusion for First Republic Bank are going to be setting money aside in their loan loss reserve. So there's just in terms of the financial sector worries, there's worries that lending is gonna tighten up. That could exacerbate a slowdown for the economy. So it's just a really tricky environment right now, and one reason why we've been fairly conservatively invested in Leaderboard and holding a pretty healthy cash position, giving our winners room to work, but recognizing some chinks in the armor here in terms of broad market health.
Absolutely. Let's also take a look at the S&P 500, 0S, and P5 on MarketSmith here, so we can see a downside reversal as well, but still holding around recent levels. So not a ton of damage as of yet. Like you said, it's more underneath the surface at this point that is the potential cause for concern.
Yeah, even when indexes were sharply higher in the morning, and stocks were working pretty well, we were still seeing it didn't take long for a lot of these top-rated growth stocks to give back gains. They started strong; they were back near session lows, even when the market was still higher. So, looking at the S&P 500 here, kind of a similar picture to the Nasdaq. It's holding that 21-day moving average. Looks like an outside day for the S&P 500 today, where the high and low today exceeded that of yesterday. So volume on the NYSE looks pretty close to what we saw on Tuesday. Really haven't seen much distribution at all in the S&P 500. All the higher volume declines since April 5th we've seen on the Nasdaq. So S&P 500 still fighting a good fight here.
Yes, that it is. And now we'll quickly take a look at the Dow. It's been improving, but also got turned away after making an early gain. It's trying to get back to that 34,000 level, which we saw a lot of trading action taking place late last year and towards the beginning of this year. So, still overall seeing an improving picture there. But let's now take a look at US briefly. This is a proxy for oil, which rose today by about 2%. So XLE, the energy sector ETF, in the green today and holding near recent highs. So is now, and we're going to see a comeback for the energy sector, Ken.
It's possible. I mean, oil is definitely getting a bid here. I mean, the front end contract, WTI crude oil futures today settled at 83.26. That was up 2.1%. So to see XLE with that strong move above the 50-day moving average and kind of holding on to these gains, I think it's time. That's why I have an energy stock in today's list of stocks to take a look at. But like I said, oil prices have been rising, which is a little maybe counterintuitive. All this concerns about a slowdown for the economy that should crimp demand for oil. So kind of a mixed picture here. But like I said, oil stocks starting to regain some momentum here.
Yes, definitely worth noting there. And SMH, we've been keeping a close eye on chip stocks, but an outsized loss today for the chip sector and SMH, with it down 1.8% today. So lagging the market here. We could see a test of the 50-day line, and I guess that could be a critical level, Ken, because are we going to see a bounce and this sector continue to move higher, or are we going to see deterioration after a nice move in 2023 for the group?
Yeah, I mean, the chip stocks started to bleed yesterday. We had that selling that picked up the pace during the final half hour of trading, and it was chip and software stocks that were kind of weighing on the market yesterday, and the selling in the semiconductor sector continued today. So again, not seeing outright sell signals in some of your leading stocks like Nvidia, Rambus, Allegro Microsystems, but SMH really close to a test of a key level here. So we'll see if support holds, but definitely seeing some chip stocks under pressure here.
Yes, that we are. Okay, and before we move on to those individual names, let's just take a brief look at the 10-year Treasury yield, given that we did have the Fed minutes come out today. So closing right around where we were yesterday, but what are your thoughts on what we're seeing on the yield front?
Yeah, I mean, it's hard to envision a scenario where yields are going to start racing higher. I mean, right now the market seems pretty convinced that we'll get one more quarter point hike, and then a pause as early as June or July. So. We'll see how that plays out, but it's just with these economic concerns, it's hard to see an environment where interest rates are going to start racing higher. Even when you look at the price chart here of the 10-year yield, it's still below the 200-day moving average. So it's going to have a lot of overhead supply to work through if it is going to continue to rally. So bond yields have been under pressure, and they could stay under pressure here.
Mm-hmm. Okay, well, now let's take a look at a growth stock that is holding up, and that is Lululemon. An explosive move on its recent quarterly earnings report, and it is not giving up those gains, Ken, trading nice and tight in a sideways formation with volume drying up. So it seems like this should be a setup on our radar.
Yeah, no question about it. I mean, this was a really outstanding earnings report in late March, and again, I mean, a company that's reporting same-store sales growth of 27%. They're managing their inventories pretty well. They gave very bullish guidance for the full year, and the holiday quarter was strong. I mean, just look at the bottom line and top line growth that Lulu has delivered. It kind of reminds me a little bit of Apple, and that Apple has a very loyal customer base, very sticky customer base, and I think Lululemon can say the same thing. It's got a pretty loyal customer base, and all this issues with inflation. Again, Lulu has been managing its inventories well, and continuing to deliver that really strong bottom line and top line growth. It's got good estimates. Those little green carrots there
Yeah.
in the annual earnings block. Estimates have been rising, and again, very strong earnings and a bullish outlook for its current fiscal year. So good one for the watch list, possibly setting up a new entry here.
Right. And while the stock did bottom last summer, it hasn't made a whole lot of progress since, a year plus. So, how do we balance looking at the short term strong performance? Clearly the move on earnings was explosive, but it's still, 11 plus percent off of 52-week highs, and even further below all time highs. So, how do you balance those various factors of that short term strength versus taking that step back? And it has been in a trading range for a while.
Yeah, I mean, Lulu could still face some overhead supply issues here, but really what I'm looking at is just the explosive move that it made a couple of weeks ago when it reported earnings. There was a lot of volume in the stock, and it's not like Lulu is a heavily shorted stock here, so there's probably some institutional buying going on when it surged, just like I said a couple of weeks ago, and then after that big volume spike, you can see volume has really quieted down here. So the fact is, the stock is holding gains. It really still looks like a stock that's under some accumulation here. So
Mhm.
back to the daily chart, we'll just see if volume can come into this market. We've seen so many growth stocks moving in light volume, and really not seeing great action in a lot of growth stocks. But I think with Lululemon, you've got this low volume pullback, and the stock is holding that 10-day moving average. So could set up a new entry, and it's behaving just like a stock should when it gaps up. It's showing strength and support after that breakout.
Great. And next on our list is Salesforce, ticker CRM, pulling back to its 21-day line in recent sessions. Not quite bouncing off of that level just yet. It was up today a little bit, but it doesn't seem like we've seen a decisive bounce just quite yet, although the stock has made a ton of progress since its bottom late last year.
Yeah, kind of a similar story to Lululemon in that this is a stock that gapped up, rose all the way up to 193. Again, they had a really nice earnings report. They gave very bullish guidance for the current quarter, and at full year, they've been taking steps to appease these activist investors that have sort of been circling around Salesforce. But this is a stock that still looks good. I mean, the Dow Jones. Actually held up relatively well today. Salesforce is a Dow component, so it's just kind of again showing signs of accumulation. It's drifting lower in light volume here, retesting that prior buy area. So if this market uptrend can gain steam, and we continue to see signs of money coming in from the sidelines, so this one still could be a leader in the software group.
So then where do we buy it? Do we buy it off of the 21-day line? Do we need it to trade around current levels for a little while longer and let the 50-day line catch up? Does it need to form a new base? What are you thinking?
Yeah, I mean, we've seen a lot of strong stocks after they break out and go on an uptrend. A lot of them do find support at their 21-day exponential moving average. So it could be an area where you start a little small position, but again, support is still in question here. Stock was down multiple days in a row, tried to rally today, and got kind of pulled down with the broad market. Ended up less than 1%. So I just wait for this, just kind of wait for the market to sort itself out here, and see if it can hold this 21-day line. Ideally, I mean, if you really want to be safe, you can watch for a new base to form. But again, some strong stocks really use this 21-day line as a bouncing, sort of a bouncing pad. But kind of maybe a little higher risk entry point, especially with the market acting the way it is now and technology stocks under pressure. Still would watch this one just because it's done a good job holding gains, and again, it was a very bullish earnings report, and came down to that 21-day line and just rose right off that. So good one for the watch list. Probably just needs to consolidate a little more.
All right, sounds good. And now let's also take a look at AESI, perhaps a new ticker to a lot of traders out there. A fresh IPO hitting the market earlier in March. So this is a young gun here with potential in the oil and gas field services group. So we're seeing an attempt of a breakout of an IPO base, perhaps a little resistance around this round number of 18. I guess you could call it a round number. But what do you think about how this is trading, Ken? I mean, it's an IPO that is profitable and maybe off of smaller sales, but it is showing some very strong growth.
Yeah, no doubt about it. That's what caught my eye. I mean, you've got triple digit revenue increases here. Earnings growth has been impressive. I mean, it's in a good business. You can see they provide logistics services to the oil and gas industry, and they also provide proppant, which is a key ingredient used in fracking, which is a popular way that oil and gas is getting extracted these days. So, and again, they came public at $18 a share, so the stock is trading right around that offer price. And I mean, the weekly chart, I mean, it's just a classic IPO base here. So, it's a compelling setup in the oil and gas sector. We like to see these IPO bases. The IPO market has really dried up in recent months. So when you see a stock setting up in an IPO base with pretty good fundamentals like Atlas Energy Solutions has, you should watch this one. I think it's one of the better setups in the oil and gas space right now.
So do we think about buying the breakout over 18, or is, a lot of IPO stocks can be bucking Broncos, a little bit hard to handle, and kind of wild action around breakouts. So what would be some strategies to use if you did want to try the breakout? Seems like a smaller position size and giving it more room, or how would you attack something like this?
Well, I mean, if I were really dying to put money to work in this market, which I think the risk level is still not working in investors' favor here. However, I think that Atlas right here looks actionable. So you just go back to the daily chart; it is prone to some pretty wild intraday swings, and you see it tried to cross 18 three separate times here. So, I mean, if this were to really take out that 18 level with some volume. Showing signs of accumulation, I think that would make the stock actionable. But it is still holding near that IPO price of 18, and definitely should be watched here. We got good growth estimates, and that triple digit growth in recent quarters, I don't think should be ignored.
Right. So if traders are going to buy an IPO-based breakout in this kind of market, definitely need to be managing risk accordingly. All right, Ken, thank you so much. And thanks to everyone for tuning in. We'll be back with more tomorrow morning on IEBD Live, investors.com/IEBD Live for all those details. Also, we have a webinar coming up at 11:30 a.m. Pacific tomorrow. That's all about option trading. If you are new to options, we've been talking about options a lot more in our content. Ken, you do a weekly earnings preview talking about potential option trade ideas. And we have option trade ideas happening daily on investors.com and our option trader app. So we're going to be talking about everything that you need to know to get you started in your option trading journey, adding that to your trading toolkit. So we'll see you there tomorrow for that webinar. You can go to investors.com/webinar to sign up. So we'll see you then. And we'll also see you right back here tomorrow at the close.